So in this video we'll be breaking down the United States dollar index known as the DXY. So whenever I want to break down any coin or any stocks, commodities, or wherever chart it is based on technical analysis, I love to start with the higher time frame. Okay, so if you look at this chart, you will see that on the higher time frame we don't really have any key level, you know, mapped out except somewhere around here. But I would just love to go to the lower time frame in order to have a clearer key level to map out. So on the this is like the 6 months time frame. Okay, so if you check the 6 month time frame, you see that we actually have a key level somewhere around here. So if I map that out, see this here. Okay, it's not so clear. So let's just move to the 3 months time frame. I love my key levels to be very clear. Okay, so what do we have here? So as you can see, there's a key level here, which is also capping the market at the moment. So I'll just draw this out here. Let's use this as our key level here. And I'll show you why this is our key. Let me just draw it down to. Sometimes I really love to deal with the present price action. I don't really love to as you can see, this is around the 1980s. Okay, so I love to deal with current price action. So if okay, as you can see, this is more like a current price action. Do you know what? Let's just take it down to the monthly to deal with the current price action in order to be able to map out our key level. Okay, so this is the 1 month time frame. So if you can see here, what we have here is our key level. The reason why this is our key level here is because price got to this point, rejected, as you can see, resistance, got here, resistance, deviation, and then pumped. Okay, immediately broke above this resistance, it became a support and then pump. Okay, price got here again, support, then broke down, resistance, and then sold off. This is a deviation. Price go back here again, this same level, resistance, sold off. Okay, price go here again, resistance, sold off. Go here, resistance, then broke above it. Okay, so we're trading currently around this zone. Price has been ranging around this zone. So what we have here now is a ranging environment. We don't really have a clear picture of where price is actually going to. So we have to zoom into the lower time frame in order to have a clear picture of where price is actually going to. So we'll make this our key higher time frame, what we call it, our key higher time frame key level. Okay, so we'll just make that in order for us to be able to know what we're doing, we'll make it our higher time frame key level. Okay, so put this on our right, in the middle. So we already know that this is our key higher time frame level that we're dealing with. So whenever price gets to that point, we already know that yes, price is going to react whenever it gets to this key higher time frame level. Okay, so it is what is capping the market at the moment. So now what we need to do is move to the weekly chart and discover what is actually going on around this level. Okay, so as you can see, we are currently trading just like I said, on the higher time frame level, price is currently ranging around this area here. Okay, now since we've been able to map out our key higher time frame level, we'll have to move down to the lower time frame and look for what price is actually doing around this zone here. Okay, so this is the weekly time frame. What do we have here? All we need to do is map out key levels as well on the weekly time frame. So this is our weekly chart, and we already know that this is our key higher time frame level, this line here, which is capping the market. Okay, so what we need to do is draw out our levels on the weekly chart as well. So the levels I can see here that is clear to me is this level here, and I'll tell you the reason why I think this level is our level on the key higher time frame on the weekly chart. This level here and this here. So this is another level on the weekly chart. The reason why this is a level on the weekly chart and this is another level on the weekly chart is because, as you can see, when price go to this level, price see resistance, and then it pumped, go back to this level, support, and then it pumped, go back to this level, support, went up, and then when it broke below, resistance, resistance, and then sold off, resistance, and then sold off. Okay, so whenever I go to this level, okay, as you can see, support, support, support. So this is what is capping the price to the downside. So what I'm trying to say now, if we break below this level here, our next target will be around this level here. As you can see, price actually consolidated around this level before breaking down. So if we break below this level here now, our next target is going to be for the DXY. We'll probably see DXY, moving down to this level. As you can see, this will be our next key level. That's if we break below. That is why this level I marked here, because it's capping the market to the downside at the moment on the weekly chart. Okay, so if price breaks above and holds this key higher time frame resistance and this key higher time frame level rather, and then if price breaks above this our weekly range, our next target will be probably somewhere around here, which will be another range that we will be playing with. Okay, but right now we're still focused on this range. Okay, as you can see, this range, which this level here, which is capping the price to the upside, and this level here, which is capping the price to the downside. That is how I play it, levels to level. What we need to do now is, what do we need to see in order for us to get a trigger point? Okay, that okay, if price is breaking down above it, because I can't just say when price gets to this level you buy or you sell. That is not really what trading is all about. Trading is you having a trigger point that, oh, okay, what do you need to see if price breaks below, or you see that there's a sign that price is going to break below? What do you need to see in order to bet that price is going to break below? So what you need to do is go down to the lower time frame again. This is our daily. As you can see here, when price got to this level here, which is a key support, okay, you can see DXY reacted to this level here, which we mapped out on our higher time frame on the weekly chart. So as you can see, when DXY got to this point, it actually reacted, and then it's moving to the upside, going back to test this key level here. So when DXY got to this level here, I already knew that, oh, okay, it's going to react to this level, and then most of the DXY pair or most of dollar pairs are also going to get a reaction. So when price got to this point, I started shorting most of dollar pairs, like the the GBP pairs, the GBP USD pairs, the USD JPY. I actually shorted the GBP USD pair, as you can see, when price got back into this my range here. Okay, so that is more like a confluence in order to go short or long on USD pairs. Okay, so just like I said, what do I need to see in order to go long or short on this pairs? Okay, I'll move to the lower time frame again, which is the 4-hour time frame, in order to get a trigger point to go long or short. So as you can see here on the lower time frame, this level is what is capping the price to the downside, and this is capping the price to the upside, just like we mapped out on our daily chart. Okay, on our daily time frame. So the reason is because price got. Let me take this out first. The reason is because price got to this level, as you can see, it rejected resistance and support. When it got here, it broke below, go back in, retest deviation. Okay, then it pumped down to this level here, the same thing, resistance, resistance, it broke down, then it broke below, as you can see, support broke down, okay, deviation, then it go back to this point again. So what you need to do is play it levels to level, okay. We are still within this range, so you don't need to think about any other thing. All you need to think about is playing the price within this range. So when price got to this point here, I already knew that we were going to get a reaction here. It's either price gets, I was waiting to see if price breaks below, then get back in, okay. We might get a reaction like this, just like we did here, okay. It's as simple as that. So what I did was that when price got to this level here, I started scaling in some of my, just like the GBP USD pair, I started shorting the GBP USD pair and most of the USD pairs, okay. So even if price broke below here, I'll wait for it to get back in. Once price gets back in, okay, it's a long for DXY, and then I start shorting most of the USD pairs. It's as simple as that. And then my stop loss is going to be somewhere around here. Once I see that price, let me put this here. Once I see that price starts breaking below this deviation here, my stop loss is going to be here, because I still expect price to hold on a minute. My stop loss is going to be here, and then my take profits is going to be at this level here, which is more like a 2-hour trade. So if I see price breaks below this level here, I'm not bothered. I still expect it to come back above, okay, and then pump. Then this is going to be my deviation. But once price breaks above this level here, once price breaks below this level here, okay, I'm just going to cut the trade, because once price breaks below this level here and starts, consolidating, I'm going to expect a breakdown, and then I'm going to flip my bias to the downside. But at the moment, my bias is still to the upside, because we're still trading within this range, okay. So since we're still trading within this range, you play it level to level, we still play it within this range. It's as simple as that, okay. So we move back to the higher time frame. This is daily. So let's say if price breaks, just like I said earlier, let's say if price breaks below this now, okay, all we need to do is, we don't expect price to break below. We don't expect price to break below this level here. We don't expect price to break below this level. So let's say if price breaks below this level, just like I said, we'll still expect a reaction here, okay, because this is also a resistance, this level here. So if price breaks below this level and gets back here, we'll count this as a deviation. Let me back. So if price breaks below this level and gets back here, we'll count this as a deviation, okay. So price is still expecting to go to the upside. So once this is a deviation and it gets back into this range, I'll take a long, okay, or rather a short on most of the DXY pairs or the USD pairs. So it's as simple as that. But let's say if price breaks below this level here, so what do we expect to see? If price breaks below this level, our next target is going to be here, okay, because this is a key level as well. So we'll be targeting this level here. Price breaks below and starts to range here, we'll be targeting this level here. As simple as that. This is going to be our next, as you can see, it's acting as a support, as a resistance, okay. It's acting as a resistance, so this is going to be our next level to watch. So I hope this video has actually helped you to understand how the key levels are very important to price, okay. So I hope I'll be able to make more videos like this in order to help you understand how key levels react to, how prices react to key levels, and how we should be able to trade them and add them as confluence to our trading system. See you later, guys.